and welcome. Good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain with me, Tavan Dubash. And for now, the market is looking in fine fettle. We again started off a bit muted, but by the end of the trading session, it looks like we are going to be at the highest point of the trading session. Managed to scale the mark of 17,800. Was fairly range bound during the trading session, but now we have seen a bit of a breakout, and 17,800 is what we're watching out for. From the broader markets, there's a bit of an underperformance, but it's the banks which are leading the rally yet again. So that's the space to watch out for. 150-point gain coming in for the Bank Nifty, and the advanced decline ratio is pretty much even Steven. In terms of the sectors and the segments which are doing well, railway stocks continue to chug along. So Rail Vikas Nigam, after that 12-13% rally yesterday, is up another 14% today, almost a 30% gain on that count over last couple of trading sessions. And RITES is also having a field day, a gain of around 7%. Earnings reaction coming in for Nestle as well as IFL Securities. Nestle is a bit tempered despite that big beat coming in on the profitability. And recently had the numbers coming in from Mahindra Holidays, which were rather strong. A big jump when it comes to the profitability. So let's pull up the intraday chart of Mahindra Holidays as well, wherein the number has come in much better than expectation. Profit figure coming in at 56 crore versus 16 crore last year, and a revenue of 712 crore versus 543 crores, and that's why you have that big spike coming in as far as Mahindra Holidays is concerned. And separately, now we are watching out for earnings coming in from Bajaj Auto. It is expected to come anytime soon, and Tata Consumers is the other one that we are watching out for. Numbers for HDFC AMC also flashing for you on the screen. Pretty much a stable performance coming in. Not too much to write home at this point of time. Profitability at 376 crore versus 344 crore rupees that we saw last year. But there is a dividend as well, so a sweetener coming in of around 48 rupees per share. Well, let's welcome on board our guests on the show as well, Kunal Bothra as well as Naresh Marani with us. Kunal, what do you make of the market setup?
Nothing to complain. 50 points up for the index. 17,800 is where we are nearing for the Nifty in terms of spot levels. And also I think on the Bank Nifty we've shown another day of consecutive price uptick, even though the magnitude of uptick for the banking index is not as strong as what we probably have seen over the last many days consecutively. But then no complaints as such, because many of the larger cap names, the likes of SBI, Bank of Baroda, etc., these stocks are seeing a strong follow-through price action for themselves on the upside. So overall, I think it's a very healthy kind of a market. Indicates that the indices or the uptrend is here to continue for the indices. Traders should hold on to their long positions for the index, something which we've initiated in a couple of days back as well.
All right, it sure is a hectic day in terms of news flow, because apart from all that Anisha mentioned, results trickling in on your screens, some of the other newsmakers as well that we can highlight as well that are in the spotlight on the price and volume action, some of the volume buzzers in trade. Atul Auto, for instance, there's been a breakdown. There's been 6 straight sessions of consolidation, and now the stock has formed a bearish engulfing pattern on the weekly chart. There you have it at about 377.9. RVNL, and yes, a lot of those rail stocks have been chugging along. Today we had an interesting discussion as well with Vinayak Chatterjee on the road ahead for a lot of these companies, and he said that the order book outlook looks very optimistic all round. The stock has hit an all-time high intraday, and in the last 2 sessions has gained close to 20%, but of course a bulk of that taking place today. And BSE, the stock's seen a breakout from the cup and handle chart pattern. It snapped its 8-month losing streak with volumes at about 6.3 times the last 10-day average. Kunal, are you jealous that we're using all these fancy technical terms also, cup and handle, higher lows, and all that?
Happy learning the progress of all of you guys.
Okay, so do you want to talk about any of these stocks that I highlighted? What your views are on the charts? RVNL, Atul Auto, BSE?
So BSE is interesting because I think BSE and CDSL are the two important stocks which we generally benchmark to see how the retail activity has shaped up. And you look at the last 1 month, and exactly 1 month back, at the fag end of the month of March, these stocks were trading at their multi-week lows. And in the last 1 month, we've seen almost like a vertical rise for these names. CDSL, I think, on an intraday basis today managed to cross back about the 1,000 levels. It scaled down a little bit, but then I think the recovery in the last 1 month just gives an indication that the retail activity is picked up again in the overall markets. The trend is here to sustain for these stocks, and I think these are classical opportunities. So if these kind of stocks, they come back to their major support points, for example, for CDSL that was around 900 odd levels or sub 900 mark. Those are classical entry points for someone who's looking out to buy from a long-term play.
Let's also talk about some of the stocks which are reacting to news flow. Crompton Consumer definitely deserves mention, a cut of 12% there. Remember, Prameet Ghosh has been appointed as the MD and CEO now. The current MD, which is Mr. Khosla, has been elevated to the level of vice chairman. JP Morgan believes that lack of operational, experience may be a bit of a concern, and Goldman Sachs too believe that market will look for strategy changes as well. So that's the reason the uncertainty is not being liked by the market at this point of time. 12% cut, and the stock has failed to recover even from the bottom of the trading session. Ipca Labs is also seeing quite a bit of drubbing in the trading session. Remember, it's acquired 33% stake coming in for Unichem at a valuation of around 1,034. It's coming in at a valuation of 440 per share versus the 386 that Unichem was trading yesterday, and that's why the analysts believe that the valuation is a bit on the higher side. Export exposure of Unichem might be a bit of problem to integrate, and margins for Ipca Labs have been under pressure, so need to watch out for that. Zomato, however, is flying away in the trading session. Citi has maintained a buy stance, target 76. They say that monetization of the dining out may be a positive in the near term. And Morgan Stanley also talked about the Q4 expectations, even though the date of the board meet is not out yet, but they are expecting that the food business or the core food business will be close to the break-even level. Naresh, your take, Crompton Consumer, Ipca Labs, Zomato, would you be a buyer in any of these names?
So I'll stick to Zomato. That is the one which is most interesting. Crompton Consumer went through the cycle post the PE takeover, etc. The stock has collapsed almost 50% or higher from the top. So not really interested in. Zomato is interesting because what we are seeing in Zomato is a classical basing out formation. Over the last 1 year, we've made multiple bottoms around that 45-50 mark. In the last 3 months, we made 3 bottoms around 50-52 levels. And if we look at today's price action, it's a 3-month high or at least a 2.5-month high. 56.75, 57 was the high for the last 2-3 months. Today we've crossed above that. Volumes have been very interesting. Day before it saw a large volume jump up. Today also is one of the higher volume days. So an indication that the base formation is strong. The momentum is starting up. An initial target price I would have for Zomato would be around 65 to 70 levels. 70 is the high of the last 1 year, and beyond that we get into much bigger momentum. But for now, at 55, 57, it's a good entry point for a target price of 70. I would keep a stop loss below 53 for this one.
All right, let's connect with Dilip Bhatt as well, who joins in on the show. And Dilip, there's no dearth of news flow today. Big numbers coming in, lots of newsmakers as well. What would you like to start off with?
Well, I think the market itself, I would like to say that the market is finally finding some kind of stability and consolidating and trying to move up. I think the bigger question still is whether we will get the tailwind of the FII, because without that, obviously, we all know that markets will continue to be difficult. At the same time, I think the way the bank results have come out, particularly ICICI, it's very clear that banking is going to take the leadership, notwithstanding the fact that this is one of the most overrun sector amongst the FIIs, because that's the one, if they have to sell, they'll be selling from banking and IT, because these are two sectors where they own in a very big way. But banking clearly looks the pick of the lot. And I think ICICI once again has very decisively proved that it is now the leader in the banking pack. And so it should also get a premium, which up till now, I think HDFC Bank was getting. So my take is that ICICI Bank will continue to rule the roost for maybe next 1.5 to 2 years. And possibly there's still good amount of steam left in ICICI Bank. Not to say that HDFC Bank is not good. I think even that holds a good promise, particularly in the private sector. And of course, in the PSU sector, SBI looks pretty interesting.
So quite positive on ICICI Bank. A lot of steam left when it comes to that counter as well. But Dilip, I'm not sure what's chugging along for the railway stocks. Look at that surge on RVNL. Now it's 17% higher. Let's pull up the 2-3 day chart if we can and see the kind of momentum we have seen on that counter. 103 now. Let's look at the 5-day or 7-day chart. A gain of 40% over the last 7 days itself. It was around that 70 rupee mark, now all the way to 100. And RITES too is having a great day. Would you be a buyer in the railway companies, Dilip, the PSUs, etc.?
So I think a momentum play is still very much on course as far as these companies in the PSU sector are concerned, and more so with the railways. Considering the fact that the overall what they're talking about is very ambitious. So I think my only worry as far as this PSU sectors are concerned, more so say uh, in the rail segment or even some of the other PSU, the moment they start doing well, the government which is strapped of cash will definitely go for an IPO, and there will be an OFS. So I think that overhang will always remain as a potential threat in an otherwise PSU which possibly are doing well on the expectations of good order book and maybe the performance that may come in the near future.
Okay, what about your outlook then on Nestle and the kind of earnings that the company has delivered, Dilip? It has been pretty strong. The volume growth has been encouraging. We've seen the rural growth as well that has been fairly promising. Do you believe that the prospects are looking fairly robust now for Nestle going down the line?
So yes, Nestle has, I think, beaten the expectations hands down, whether it is QOQ numbers or YOY numbers. I think they've all been pretty confidence inspiring. So I think my take on more so on the FMCG is that the rural part is something which they were facing as a problem in the past 1.5 years in terms of the demand. So I think if that returns back, which is what looks like very much possible over next 3 to 4 quarters, plus the fact that the inflation, as and when that softens, particularly for some of these companies, I think there will be two very strong tailwind, the inflation softening and the revival in the rural demand. So there can be a good momentum play in FMCG across, whether it's Levers, whether it's Britannia, whether it's Nestle. I think some of these companies possibly will next 3 to 4 quarters, but more as a tactical momentum play, because otherwise the valuations continue to be prohibitively expensive.
Valuations continue to be expensive. In fact, on that note, we'll slip into a short break. But as we do that, let's quickly look at some of the stocks which are seeing results reactions. We are talking about Mahindra Holidays. That's seen a solid surge. HDFC AMC is also stabilizing a tad bit. While the revenue is a bit lower than what Street expected, at least they've managed to meet expectations on the bottom line. And then there's a sweetener of 48 rupees coming in as dividend. And Nestle, the results were very strong, a big beat coming in, but just the stock had already run up ahead of numbers, so pretty much around the flat line. Slipping into that very short break and being right back. Thanks for staying on with us. Still tuned into Closing Trades. We're in conversation with Dilip Bhatt as well as our technical guests Naresh Mirani and Kunal Bothra. Naresh, let's get in your take then on some of the movers on the flip side then. CG Consumer, as we flagged off, a very weak link in today's trade. And what's the outlook on Schneider Electric as well?
So Crompton Consumer is a stock which has been in a downtrend for quite some time now. It peaked out around 500 odd levels back in 2021. Since then, it has been a lower top, lower bottom formation. Tried to make a recovery in July to September, October of 2022 to 420, and since then again it has been in the lower top, lower bottom formation. Even in the last 2 weeks, it could not make any sort of a comeback with the bounce back in the markets, and now it's broken down. Now the price point to watch out for is the 230 level, where it was a base for the stock for the last, say, between 2018 to 2020. So not really interested in the stock out here, would wait for some more time, let it bottom out. But as of now, the trend remains weak. Schneider Electrical is a stock which saw a spike yesterday and has not seen a follow-up move today. But overall, relatively a much stronger chart out here. So at current levels, it would still be interesting at 165 to 170 to actually look for a buy.
Do you track Crompton Consumer or Ipca Labs closely? Would you say the reaction today on both of them is a bit overdone? Dilip, the question is for you.
Oh, sorry. You're asking regarding
Crompton Consumer, the leadership change that has happened there, and Ipca Labs, which has acquired Unichem as well.
So as far as Crompton is concerned, I think on a longer term basis, it certainly deserves a look. But certainly, I'm not in a hurry to buy this particular stock. I think the fundamentals have yet to play out in a very significant way. Maybe this leadership change is something which possibly is going to make some impact. I'm not too sure on that. But I would not be in a hurry to buy even otherwise Crompton CG Consumer. Now, as far as IPCA is concerned, very frankly, I haven't gone through the details. The way they have taken over Unichem, what is going to be the impact of that? So really, I'm afraid I'm not in a position to comment on that on IPCA Laboratories. What is going to be the impact for them? In what way it has become so negative that markets are not reacting positively? I'm not in a position to comment.
Fair enough, taken that point, Dilip, but we are expecting numbers from Bajaj Auto shortly. So let's go across to my colleague Shrishti and try and understand what the expectations are, because as far as volume is concerned, we are expecting a decline, especially on the export front. But what should we expect from the margins and profitability? Shrishti? Okay, Shrishti will be joining us very shortly. But in the meantime, Kunal, your take, Bajaj Auto was one stock you have been quite positive on. Continue to maintain the stance?
Absolutely, Anisha, and I would continue to maintain a very strong bullish stance. Hopefully, the results, they can just add to be more of a catalyst rather than more of a impediment to the stock price trend. We've seen a phenomenal recovery for Bajaj Auto in the last 1 month from 3,500, 550 mark. The stock has scaled up almost 1,000 points in that kind of a time frame. So the chart patterns have looked very attractive. What started off to being more of a short-term daily chart breakout and is now engulfed into more of a weekly as well as a monthly chart breakout for Bajaj Auto. So this is generally a sign of a longer-term trend change which has happened for the stock price. So my sense is that the chart patterns are extremely bullish, and traders who've been holding on to the long positions, say from a couple of weeks back, they should continue to hold on.
All right, let's take it across then to Shrishti. She joins in with what the ET Now poll is expecting. Shrishti?
So the street is expecting a marginal decline on a sequential basis on all of the fronts. All the headline numbers is the expectation. And talking of the volumes, because this time around the sequential drop of 13% is what we have witnessed for the overall volumes, and exports have been the biggest drag, which saw a degrowth of 21.5%. Although the 125cc as well as the three-wheeler segment did perform well, and the domestic business was supportive, and all of these factors will reflect into the earnings. And talking of numbers this time around, the revenue is expected to show a decline of 10% sequentially. 8,412 crores is our expectation. EBITDA is expected at 1,571 crores, while EBITDA margin, this will be a key to watch, because in last quarter, the company posted its highest ever EBITDA margin of 19.1%. A little bit of moderation is what we are expecting from those numbers. 18.7 is our expectation on that front. So we will be keenly watching out for this number. Any outperformance on this front will be a thumbs up. And lastly, onto the profit figure, a decline of 5.5% is what we are expecting. At 1,412 crores is the expectation. But talking of apart from the numbers, the margin contraction on a quarter-on-quarter basis, the factors affecting is definitely the operating deleverage despite the price hikes and a favorable foreign exchange as well. But going ahead, we will be watching out for the management commentary, especially on the export fronts, because from Q1 FY24 onwards, they were expecting some bit of a pickup, starting from Latin America, continuing with the African markets as well. So any commentary on that front will be a key thing to watch. And other than that, the margin outlook and some of the new launches that the company has planned, we will be watching out for that as well. Nevertheless, the stock is trading at its 52-week high levels. Back to you.
All right, thanks very much for giving us that heads up. Anything you'd like to share with us, Dilip, with respect to Bajaj Auto, as to how you're looking at the volume growth and what could potentially be the next catalyst for the stock when it comes to earnings?
Sure. I think in this segment, both Bajaj Auto and TVS possibly looks pretty good. Bajaj is almost at a I think all-time high. But we all know that Bajaj Auto, basically, I think there are two factors. One is the increase in the percentage of three-wheelers as an overall contribution to the sales. That is something which is really going to change the profit profile, as well as the exports to some of these countries. I think both the factors have been the laggards for them in the past almost a year. Especially the two-wheelers, of course, is there, but that wouldn't really move the needle. These two factors, three-wheelers as well as the exports, both will help significantly. And I think the prospects on both the front looks pretty good. So I think while Bajaj Auto has already gone up quite a bit, I would still hold on to it from the current levels. But I would look to buy TVS Motors from the current levels.
So that's the take coming in as far as Bajaj Auto is concerned and how the expectations are stacking up. But we also have Tata Consumers that will be reporting numbers shortly. We already got numbers from Nestle and there was not much to complain there. Yes, the operating performance could have been better, but nonetheless, a decent performance coming in from Nestle. But Winnie, what to expect now from Tata Consumers?
So in terms of Tata Consumers numbers, now we're expecting a revenue growth of around 10 to 11% coming in from the company, while profits are expected to see a better growth of around 18%. Margins, slight bit of a contraction there. 13.6% is what we're expecting the EBITDA margins as versus 13.9%. So slight bit pressure still of that inflationary trends is continuing on the margins. 30 basis point contraction for the EBITDA margins of the company. Let's just get a breakdown of the numbers. Now double-digit revenue growth mainly will be aided by the India food business, which is expected to see a more than 20% growth is what we are understanding, while India food business will be mainly a pricing-led growth. So obviously because prices in salt had seen an increase, so that double-digit growth will be mainly a pricing-led growth in the India food business, which is overall leading the growth for Tata Consumers total revenue growth. Now we are expecting Nourishco also to continue to see a strong growth coming in. Gradual recovery is what we are expecting in the India tea business as well. Growth is expected at around 1 to 2%. That was a bit under pressure in the last couple of quarters. So yes, an improvement in the tea business for the company. And international business, we are expecting a bit of a muted growth there because of the inflationary environment. Factors to watch out for: what is the top line growth in the India food business, overall business in terms of margins, market share trends in tea, as well as any commentary coming in on raw material prices is what we're watching out for.
All right, Vinny, thanks very much for giving us a heads up as to what to expect from Tata Consumer. Meantime, Dilip, before we let you go, let's get in a sense as to what your top recommendations are, some mid-cap ideas.
Well, I think the pharma pack looks pretty interesting from the current levels. I think they have really performed quite badly in the last 1 year. So I think some of the companies from the pharma pack is something which we will be looking forward for. And I think in the white goods segment also possibly led by Voltas and Blue Star, I think they should do well. Even Whirlpool looks pretty interesting from the current levels. So I think these are just some of the things that we like at the moment. And we'd like to focus on some of these stocks.
Thanks very much, Dilip, for joining in and sharing with us your outlook on the markets. Naresh, what about you? Some closing trade strategies?
So continuing to the idea of Bharti Airtel, which is looking interesting, the stock is setting up for a breakout above the 775 mark. So this could be a stock which could see some bit of a move towards 800 odd levels in the short term.
Bharti Airtel, an interesting one there. But Kunal, what are you betting on?
Titan is something which I believe is also heading towards a breakout about 2630 mark. So the stock has been just trading close to that level. Looks extremely attractive with momentum at play. That's a stock which I would recommend to buy as well. And would look to go for this closing trade.
Okay, so that's the closing trades for you. On that note, we let Dilip go. Thank you so much for joining us. But as we pointed out, it's the railway stock, especially the likes of RVNL as well as RITES, which are doing well. Earlier today, Prime Minister Narendra Modi inaugurated Kerala's first Vande Bharat train as well. The semi-high-speed train will run from Thiruvananthapuram to Kasaragod and reduce the travel time between the two by around 2 hours. My colleague Samir Dixit joins us and he's talking about what has happened with respect to Vande Bharat train special.
A special moment for Kerala, as Kerala is all set to get its first Vande Bharat train, and in total this is the 16th Vande Bharat train. And here is the special ticket of this inaugural run. So a special ticket for a special moment for Kerala. So the first Vande Bharat train for Kerala will run between Kasaragod and Thiruvananthapuram, and right now we are inside this special Vande Bharat train. And if you see the theme, the entire look and feel of Vande Bharat train looks very luxurious, and which is all set to transform the traveling experience. So this is the chair car sitting arrangement, having a composition of 3 plus 2 sitting arrangement. The seat color is blue, and if you see, this is quite a comfortable seat with better cushioning. Leg space that has been provided is quite comfortable. You can put your books over here. The tray that can easily be unfold and fold so that you can enjoy your meals. If you are standing, if you are passing by, then these sort of sturdy bars have been provided. You can hold it and then you can pass it. These are the seat numbers which have been indicated even in the braille system that has been indicated. Similarly, if you see, these are sensor based light. If you want to just read your book or enjoy during the travel, then just by touching you can switch on or switch off the reading lights. Similarly, the entire coach has been equipped with a CCTV camera. The LCD and the LED monitors have been placed to provide correct information on real-time basis. So there are multiple features which will definitely make the traveling experience of the passengers much more comfortable. Now this Vande Bharat train will run between Kasaragod and Thiruvananthapuram and will cover the distance in just 8 hours 5 minutes, whereas the Rajdhani train takes around 10 hours 30 minutes. So this will definitely save time because the Vande Bharat train is lashed to run at an average speed of 130 kilometers per hour. Now let me talk about the fare structure. The chair car will have a fare structure which will cost you somewhere around rupees 1530, whereas the executive class will come for around rupees 2820. But all in all, the Vande Bharat train is very comfortable because the feedback that has been provided by the passengers for the last 15 Vande Bharat train is very that makes quite comfortable, and this is the reason that it's this train. The Kerala, the people, they were quite waiting for this train, and now it is all set to run between Kasaragod and Thiruvananthapuram.
Welcome back. Well, the market is holding on steady. A bit of a slide, but not by a whole lot, given the fact we have been trading in a narrow range of around 50 points. One stock which is doing quite well today is Zomato. We have seen quite a bit of spike there. Of course, Citi note as well as Morgan Stanley note is something which is supporting the sentiment. But overall, if you look at these new age, fintechs, etc., we have seen quite a bit of recovery from the 52-week lows. Zomato itself is up 46% from its low. Paytm is up 50%, Policy Bazaar is up around 66%. Even the likes of car trade delivery have managed to gain almost 15 to 25% from their 52-week lows. But then one stock, Nykaa, it continues to be at all-time low level, 116 thereabouts. Deepak Shenoy now joins us on the show. Let's try and understand what's happening with Nykaa. Deepak, any take on Nykaa, because that's the only one that continues to languish while the other new age tech companies have managed to recover?
Yes, indeed. In fact, I think I was wondering about why this is. It's obviously because I think some of the funds or insiders are selling. The problem with new age companies is their best friends, who are the venture capitalists, become their not so good friends after the IPO because they are mandated to sell or they want to sell because they want to provide an exit to their own investors. So after the lock-in period, you find that continuously over a period of time, people sell. Also in Nykaa's case, a lot of insiders, when their stock options are coming due, they are continuously selling as well. So the volumes on the sell side from insiders, from funds seems to be relatively high. I don't think there's a massive business negative right now. We haven't seen the results yet, but they were profitable when they went for IPO. I don't think they have been quite as much since. I hope this year they're able to show better numbers as well. But that will pretty much determine the fate, because otherwise the selling pressure is what's taking the price down.
Of late, Deepak, we've also seen these big reactions coming in as far as leadership change is concerned. Crompton, of course, has been in the red since the start of the trading session, and no buying on dips happening there, 12% cut. And after reporting a great set of numbers, Mahindra Holidays has also fizzled out. And the reason is that their head as well, Mr. Arun Nanda, has decided that he's going to retire.
Yes. It's interesting because many of these companies, you would imagine that all the processes and all that are in place so that a management transition would not impact the business so much. But it turns out the charisma of the leader itself drives a lot of motivation both within the company, and then many of these people in Crompton, in Mahindra Holidays, which I think has reached close to an all-time high nearly 15 years after the IPO. And it's like, it's been 10 years, it's done nothing. And after finally a good set of results, we're seeing a management change, which means, we don't know what's going to happen going forward. So I think some of it may be, knee-jerk reactions, but it tells you how important management is in a lot of relatively smaller companies. And, but I think even the largest, even like in Kotak Bank's case, people are apprehensive about how the bank will run, although it's a very professionally run bank. They are apprehensive. You'll see that bank has lagged in terms of stock price, despite relatively good performance in the banking sector. So I think underscores the importance of management in the short term. But in the longer term, I think, when management proves themselves, things come back because the business itself in all these cases is pretty stable now.
Okay, meantime, what about the outlook on the kind of IT sector numbers that have come in? Infy in particular, that stood out like a sore thumb in terms of its disappointment. Just wondering whether or not you think that this is a prolonged start of disappointing numbers from Infosys, or it was just a one quarter, and what's your outlook on the other heavy IT tech numbers?
So I can't comment about Infosys. We have a conflict, but I can tell you about the IT sector numbers. There is a bit of a disappointment because you're looking at even a TCS, and we own TCS. There is a fairly low number on a year-on-year basis that you're seeing. You're seeing apprehension in terms of potential business coming forward. There's a lot of hesitation in the US as well because there's a recession. Retail is hurting. Retail has been a relatively large part of their growth in the last 1 or 2 years. I think they have to move back to BFSI, and BFSI will probably do well, but not big commitments coming on budget. There is the impact of the AI move, which is, I think, very positive for the Indian IT industry, because more and more people will want to discover more and do more, and Indian IT has the labor force to be able to do a lot more with it. But given this flux, I think this period will be one where you'll see some companies, and today I think another company, Persistent, also announced results, which was fairly good in my opinion. Again, we own some of it, so there is a bias there. I think here you're going to see commentary being apprehensive regardless of which company it is. But over the course of the next year, we are going to see a lot of these companies, especially the larger cap companies, come back in a reasonable fashion, simply because over time, once the fear dies out, the core business itself is attractive. They are very cash positive, no debt, and have the capacity to expand. So we're positive longer term. In the short term, I think the stocks will not do much.
So there might be some near-term headwinds, but Naresh, your take about some of these counters which are sitting at all-time high level, Anupam Rasayan, ITC, Polycab, Bajaj Auto, and even RVNL for that matter. Looking at any of these names?
So a lot of these names are overdone in the near term. So Anupam Rasayan has gone up from 600 to 1100 in no time. So out here, it would be prudent to keep a trailing stop loss and ride onto the position. RVNL for a case has gone up 30-35% over the last 2 sessions. One could be looking at booking profits here rather than trailing also. So overall, a lot of these names are overdone in the near term. ITC may have still more steam go towards 420-25 in the near term. But rest of these names which are hitting new highs, they've been hitting new highs for the last maybe couple of weeks as such. So overbought in the near term, so not the price to chase.
Okay, meantime, just wanted to also check in on some of the interesting movers that we've seen in the last 1 week on the downside. And you've got something like an Aavas Financiers, that stock has declined close to 13%. Crompton Greaves Consumer, of course, we're seeing that stock down and out, and therefore the 1 week chart looks disappointing. Z Entertainment as well, that stock has declined about 8%. There's been something like a Balaji Mines, that stock too has seen a cut of about 10% or so. Schaeffler India added to that list, and an Aptus Value Housing as well has dropped about 7% or so. Wanted to get in your take then, Naresh, on the charts. What's the view on Z Entertainment or Ipca Laboratories, Aptus Value, if you've had a look at any of the charts?
Z has been in the downtrend for quite some time. It is back to the place where it started from. So 180 remains a very crucial price point for the stock. 180 is where the last big gap up was there, which is where it went up to 380 levels one way. Then it has been a one-way downside over the last 1.5 years. So out here, till the time it holds 180, it is still a stock which could bounce back going forward. But till the time it doesn't cross 210 to 20 levels, would not be looking at it as such. So for now, an avoid, but not a short at current levels. Aptus also similarly 220.25 is the bottom made in June of this year. So that's a stock also still in the downtrend, so not really looking at it. So a lot of these downtrend stocks, one is better off waiting for them to bottom out than to preempt.
All right, and while we're awaiting some big numbers today, come tomorrow as well, the street will be closely watching out for Maruti, Bajaj Finance, SBI Life, as well as HDFC Standard Life's numbers. Those are the Nifty 50 companies that will be declaring their earnings. Let's get in an estimate as to what the street is penciling in for some of these companies. And my colleague Shrishti first up joins in to give us a sense as to what auto giant Maruti Suzuki could deliver in Q4. Shrishti?
Yes, we all know that the passenger vehicle sales have been holding steady, similar is the like of Maruti Suzuki. And this time around in the earnings, the key thing to watch out for will be the margins of the company, because last quarter the company reported a EBITDA margin of 9.8%, and this time around we are expecting a number at 10.6%, and if 10% mark is surpassed, then the company will report its margin above 10% after Q2 FY21 quarter. So a key thing will be to watch out for is the margin front. Talking about the volume growth, this time around it was a growth of 10.5% on a sequential basis. The realization is expected to be up 3% on a quarter-on-quarter basis. And let's talk about the number front. Revenue is expected to show a jump of 12% on a sequential basis at 32,529 crores is our expectation. EBITDA is expected to show a growth of 21.5% at 3,441 crores. Margins, like I told you, 10.6% is our expectation, up from 9.8% last quarter, and a profit jump of 6.5% is what we are expecting at 2,502 crores. So these are the expectations from Maruti Suzuki. Definitely there has been an improvement in the product mix, although the SUV share was almost flat, but the uptick in the margin, the factors are coming up from the likes of benefits due to the lower RM cost, and operating leverage will also play its role. But other than that, onto some of the drags, then the exports saw a bit of a sequential decline, and the Auto Expo expense back in January will also play heavy onto the marketing expense, is what we believe. So these are the expectations from Maruti Suzuki. A steady set this time around. Definitely look out for margins, but we on the commentary front, we'll look out for commentary onto the initial signs of the demand slowdown, is what all these dealers are highlighting, and the view on the increase in the supply challenges of late, as well as how the response for some of the recent launches of Maruti Suzuki. So all eyes on Maruti Suzuki results.
Thanks, Shrishti, for joining us with that. But, Deepak, the entire theme of Capex Industrials has been doing quite well. Today, railway stocks are quite excited. We heard from the global giant ABB talking about how the Indian order flows are expected to be up around 46% on a year-on-year basis. Which are the top stocks that you like from this entire theme?
So, I mean, we have an investment here. So, RVNL's been going crazy on that front. But I think a lot of infra stocks here will do well, whether it is directly in railways and defense, or it is in indirect infra here. So we like L&T, for instance. I think it's been a long time coming for that stock to move. They've been doing very reasonably in the last few quarters as well. Also, we've got companies like RVNL, there's IRCON, there's a bunch of these are the PSU-led pack in the railways, where a lot more orders are coming their way, which would have usually gone in the past to some kind of a joint collaboration with Japan or some other country, and then there would be firms from outside that would actually get some of these contracts. This time they're getting more of that going to Indian firms, and there's an outsized order book in comparison with their annual revenues. Some of the order books are 25,000 crores, and they're getting new orders of 25,000 crores. So it's substantial for these companies in the defense space as well. But I would say you have to be ready to take a 25-30% downside on any of these stocks because they are very, very volatile, both on the upside and downside. So this is not for the timid or the tame-hearted. I think these stocks are going to be very volatile. There's just too much interest and too little volume relatively for these stocks. For someone who does not have the stomach lining to take the volatility.
Two stocks on the charts that are seeing a price volume breakout: Bajaj Finance and Canara Bank.
Bajaj Finance is interesting out of the two. That stock has come back into a strong breakout mode of a bullish pennant formation. So it's a combination of pattern where the stock recovered from 5,600 and below almost a month back. It spent some time, I think a week or so, at the 6,000 odd mark, and today the stock seems to have broken out of that 6,000 barrier, which means it's formed a classical bullish pennant formation. Looks attractive on the short-term setup, and this pattern height is almost 400 points, which means we can be looking out for 6,400 broadly as a near-term target for Bajaj Finance. Canara Bank could be interesting again because of the way most of the PSU banking stocks have behaved in the last couple of days. The momentum has come back into the space for the PSU banking stocks. Many names like Bank of Baroda, etc., have done reasonably well. So I think in that regards, Canara Bank is also looking attractive. Trading at 307 mark, would look out for 320 as a near-term target.
Okay, let's get the BTSC trades also out of the way. Naresh, let me first come to you. What are the BTSC trades that you are spotting?
So would we go with Bharti Airtel? Continues to look interesting. Could see some momentum. A stop loss at 768 and a target price of 785. Was looking at Axis Bank, but it has seen a sharp downtick. Got stopped out on that one right away.
What about you?
So I'll go with large cap names. Bajaj Finance as a buy, target of 6,225 on a BTST play, stop loss at 6,000. And the second would be a buy in Titan, where I believe the stock is heading towards a classical breakout. So would suggest a buy, 2750 as a near-term target, and stop loss could be kept at 2560 mark.
Okay, so that's a BTSC trade, Bajaj Finance. Interesting one. We have the numbers coming out from Bajaj Finance tomorrow. Let's go across to my colleague Vamakshi to talk to us about what the expectations are. Vamakshi.
Well, a good set of numbers is what we're expecting from Bajaj Finance in the fourth quarter of FY23. Net interest income is expected to see an uptick of nearly 29% on a year-on-year basis at nearly 6,186 crores. PPOP, that is the pre-provisioning operating profit, is also expected to surge higher by 29% on a year-on-year basis to 5,110 crores. PAT is also expected to see an uptick of nearly 23% on a year-on-year basis, and another positive is that the provisions are also expected to decline sequentially from 841 crores to 829 crores. So largely we're expecting a good quarter as far as growth and profitability is concerned. Now net interest income year-on-year momentum is also expected to be strong given the healthy AUM trends, controlled OPEX as well as better operating income could in turn aid the BPOP as we see. And apart from that, we're expecting a slight moderation to come in terms of margins, and on the other hand, we're also expecting that credit costs are expected to moderate. Improving collections could be a tailwind for asset quality as well. So largely those were the expectations, but there is some important factors that you should watch out for. That would be the ability to sustain growth momentum given the rising competition in the space from existing players, as well as the entry of Geo Financial Services, NIM and business outlook, as well as commentary on introduction of new products and the company's ability to scale them up. So all in all, we're expecting a good set of numbers to come in from Bajaj Finance.
So the charts as well as the fundamentals seem to be aligning. That's the view coming in from the ET Now poll. But moving right on to an ET Now exclusive, and we learn from reliable sources that Sai Life Sciences is likely to see a change in their ownership. In fact, we understand from sources that Bain Capital has started their due diligence to buy TPG's stake. Let's understand more perspective on this. My colleague Anurag joins in with the exclusive details. Anurag?
Bain Capital has started the due diligence to acquire an about 43% equity stake in Sai Life Sciences, which is one of the leading contract drug makers in India. Bain Capital is seeking to buy this stake from TPG Asia. Now, TPG Asia had invested in Sai Life in 2018 when it had bought this 43% block in the company from Tata Capital Funds. The founders of Sai Life, who are owning, as a group, they are owning 38% equity in the company. They are not likely to sell any of their stake. And besides that, there is a Tata Capital affiliated fund called HBM, Private Equity India, which has a 6% holding, and that will also continue to remain an investor in the company.
So much for getting us those details, but a sudden knock coming in as far as Bank Nifty is concerned. Remember, the US futures are also, suggesting a decline. The Dow futures are down 140 points. Nasdaq is down 56 points. Kunal, what's happening with Bank Nifty, and would it change your view on the market at this point of time?
Not really. I think just we've scaled down 150 points on the Bank Nifty.
250 points in the last, few minutes itself.
But after a rally of 1,500 points on the Bank Nifty, no complaints.
So glass half full.
Glass
3/4 full.
3/4 full.
Okay. Naresh, do you as well share that sentiment, given what we're just seeing on the charts flagging off the levels right now?
So we are still flat for the day as such. So the view remains the same. It's a buy on dip. So you actually want a little more dip. So to start buying in on the Bank Nifty. Trend still remains very, very positive.
Deepak, are you still a buyer in the banking and the NBFC names? Earnings so far have been quite okay, but the question is, has the earnings peaked?
I think margins have peaked. Earnings, I don't know, because I think they'll continue to grow. There's going to definitely be a margin contraction in some of the banks. I think ICICI Bank mentioned it. We have an investment, so bias there. But NBFCs, I think the smaller NBFCs are going to see a much bigger problem. Because the cost of funds has gone up considerably. The larger banks, their cost of funds have not changed much. HDFC, ICICI, and even I think Kotak to an extent. The cost of funds hasn't jumped up significantly, but small NBFCs have. So I would be careful about those. Microfinance may actually turn out quite okay because their spreads are very high, and if they're not seeing too much in terms of delinquencies, then they should do quite okay. We'll see after the results. But we're selective on this front. I think some of the larger banks we own, maybe some NBFCs is what we're looking at, but we'll wait for the larger results to come in and Jio Financial's entry as well before we kind of make a larger entry into the NBFC space.
Thank you so much, Deepak, for joining in.